Hello, everyone. So, we're starting a couple of minutes late here. I apologize in advance. I have a bit of a bad cold. I've had it for the last few days. Hopefully, it's not COVID. I'll go get tested tomorrow. But yeah, so today my voice is not going to last very long. So, I'll try to make this short and sweet. Let me just get my tea. There we go. And all right, so off we go. So, today we'll be talking about I'll really quickly talk about the housing stats that we've had for last month. They came out from the CREA. They came out on the 15th, so that's 2 days ago. And then from Teranet, those ones came out today. And then in light of these new housing stats, especially ones we're going to be looking at lower condo prices or slightly lower condo prices, we'll try to make sense of the Airbnb IPO that took place last Thursday, a whole week ago. All right, so without further ado, let's get started. So let's look at it very quickly at the November Canadian housing stats, and see how we've been doing. All right. So as usual, the links are already in the description down below. So this is your first link over here. So these are kind of the main takeaways that we want to be focusing on right there. So this is in case you're wondering where I'm getting my numbers from and my charts from, that's where I'm getting them from. So in summary, national home sales dropped by 1.6% month over month. Not a big deal, but again, that's a slight drop, and that's to be expected because, again, it is the fall season going on winter. It's normal to have slightly fewer people interested in going house shopping when it's getting uglier and colder outside in Canada, right? Actual activity was up 32.1% year over year. Again, if you're comparing November 2020 to November 2019 numbers, and this, as we will see on the next slide, is primarily due to is still part of the remnants of that lack of spring market, and then the sort of FOMO that was created primarily for single family detached homes in the burbs. So we still see an increase relative, a seasonal increase relative to last year. But again, overall, it's starting to kind of peter out slowly. Newly listed properties have dropped by 1.6%. Overall, and then actual national average sale price rose by 13.8%. So all single family detached homes, two-story homes, tiny bungalows, townhouses, and apartments, squished them all together throughout Canada, and that gives you an annual price increase of 13.8%. Again, it's an interesting metric, but it doesn't really mean much to the average person because let's face it, if you're interested in buying a house in Vancouver or in Toronto or in Nova Scotia somewhere, let's say Halifax or whatnot, you probably care about those particular individual markets. You don't really care about what happened to the national price, but again, it's a good indication of whether there's a housing boom, perhaps a bubble in certain cases, or whether there's a decrease. All right, so now let's look at some more specifics. So residential new listings, again, this is still from the CREA. Again, first link in the description down below. So this is the data that we've seen here for the first quarter of 2020, second quarter of 2020, obviously, as I said, that spring market, that never happened because, we were in a lockdown. And then finally, obviously, the third quarter here. So this is what we're seeing. And obviously, at this point, the last 2 months or the first 2 months of the fourth quarter, which is October, November. And obviously, in January, we'll get the December numbers. And again, we can see that they're slightly lower than the average for the third quarter. But again, that's to be expected. You see the seasonality moving forward. And again, all of these higher numbers here for the third quarter and then the subsequent 2 months is really to compensate primarily for the lack of the spring market. And then again, for single family detached homes, especially in kind of the burbs, it's really people trying to, buy homes that they see as safer because no one wants to live downtown anymore. Although now with the vaccine, people starting to get the first few doses and things looking pretty good for the Moderna vaccine also to be approved within the next few days. Chances are that 2021 will be a much better year, hopefully, than 2020 was, which might see a return, if not to normal, but at least a return back to looking at real estate in the larger metropolitan areas, including Toronto, etc. Now, Obviously, Toronto prices have also been on a tear recently, not as much as other places like Montreal, for instance, but especially single-family detached homes, pretty much across the nation, with some small exceptions, have been on a tear. The ones that have been dropping in price are the condos. And this is where the Airbnb's IPO last week is sort of interest to us. But let me just finish with the national stats here for November, and then we'll kind of turn the corner, talk about condos, and then how that's relevant to Airbnb and whether you should care about, investing in that, or whether you're better off buying an investment condo instead. All right, so as I was saying before, these are the residential sales in Canada. So these are the total numbers, and same thing here. You saw the new listings, so the number of new listings. There were more numbers on the market, but again, from month to month, slightly fewer. And then this is really the sales activity, and you can see this massive increase in sales. And now, again, the national average is 13.8% price appreciation. So that's this number over here, but it's made up by, these provincial breakdowns. So if you want to look at individual provinces, you can basically see that for November, it was really Quebec and then PEI that led the charge, with Ontario in third place in terms of price appreciations overall. Now, obviously, it depends where, which sub areas, because again, Montreal prices rose a lot faster than Quebec prices. Quebec City prices rose, and same thing, with for PEI, Charlottetown versus other smaller hamlets on the island. So again, if you want to look at that into more detail, I would highly advise that you always look at your specific sub areas. So again, these are the stats that I just showed you. We'll finish up the main stats over here. What you want to do is really scroll the way down to this. I'm going to just copy this. Again, it's first link in the description down below, but let me just put it in the chat as well. Here you go. And what you want to do is you want to download this Excel spreadsheet. So now the Excel spreadsheet, once you download it, you'll have two sets of data. You have the seasonally adjusted data. So they're trying to account for reduced overall activity, usually in the fall, late fall and winter months, etc. Or you can look at the unadjusted raw data, if you will. So here's the adjusted data. If you want to look at overall, this is what it looks like. So it's kind of, it looks kind of boring because it's just a ton of numbers, but these are the overall. So on the right hand side here, you're looking at the composite benchmark, and then for single family detached homes, 1-story homes, 2-story homes, townhouses, and then apartments, i.e. condos, and they're going back all the way to January of 2005. And then if you're scrolling back down, you can see the latest numbers here over. So again, this is the aggregate. So this is the whole of Canada, and you can see in the whole of Canada, yes, pretty much the only thing that has dropped in price, if you're comparing these, you see from one to another, from every single section, the only thing that really has dropped in price are the condos. Everything else has been going up nationwide. Now, obviously, if you're you have the exact same stats here, the exact same breakdown, but then looking, at Vancouver Island, Victoria, Lower Mainland, Greater Vancouver, etc., etc., etc. So for all of the main and large and medium-sized towns across the country, really. So you keep going until you reach the whatever you want to look at. So let's say if you're looking at Greater Toronto here, let me just there we go. Let me just freeze this in place. There we go. So if you're just looking at, let me see. So townhouses went up by about $4,000 in Toronto. 2-story homes went up by about, what is that? Like 13,000 roughly. Again, I have a bad cold, hopefully just a cold, not COVID. So my brain is not quite as sharp as it usually is. 1-story homes went up by about 5,000, and then a single family detached by about $10,000 or so. And you can see here again about $6,000 drop in condo prices, further kind of showing that drop. So yeah. Whatever you want to, whatever area you're interested in, I highly advise that you actually look at those individual statistics instead of just considering the nationwide numbers. Anyway, so monthly home sales, this is what happened with that. And here's the sort of the data tracking the apartment, again, condo prices, the composite. So that's the average of everything. So this red line up here corresponds to the black line down here. And then you have the breakdown over there, right? So you can see, again, townhouses went up by a bit. One story single family detached went up by a bit. And the ones that they gained the most tend to usually be the 2-story ones. And then, as I said, condos dropped a tiny bit, more so in some other specific jurisdictions if you're looking at them. Now, finally here, the residential market balance. You're looking at on the left-hand side here. You can see it's the blue histogram, the little bar graph here. So that shows you the number of months of inventory. And yes, when the market was shut down, when we were in lockdown in the spring, there were, about almost 9 months worth of inventory because no one, there were barely any sales. And even though there weren't that many listings, pretty much no one was buying. But now more recently, even though we have record or close to record numbers of listings, there are also close to record number of sales, and prices have never been higher in many jurisdictions across the country than they are right now in the middle of a pandemic, nonetheless. And then on the right-hand side, they're looking at the sales to new listings ratio, and that's, again, the percentage here. About 75% of new listings or newly listed homes get sold within the span of a few weeks. All right, so so this is normal to see the numbers of number of sales dropping, and again, this is kind of unprecedented to have this many sales this late in the season. And again, this highlights the average overall number of homes. Most of that demand comes from single-family detached homes, whether it's 2-story or 1-story homes. For condos, there's more and more of them are sitting unloved on the market. Now, the reason why this is relevant when it comes to Airbnb is obviously you can rent out your basement or a home, whether you're living in a giant mansion, a medium size or even small size, a single family detached home. That's not a problem. You can also rent out your entire apartment. Now, a lot of, and when I say a lot, I mean literally thousands of individuals. Again, the numbers tend to fluctuate depending on which data set you're looking at, but it's estimated that there have been anywhere from about 20,000 to close to 40,000 condos that had been in different stages of either paid for or bought as bought with the idea that once they will be completed, so bought as pre-constructions, once they'll be completed, people would turn them into mini hotels, i.e. Set them up for Airbnb. And then obviously Airbnb was supposed to initially have its initial public offering, so be open for investors to the public earlier this year, but with COVID, it got delayed. And finally, last Thursday, so exactly a week ago from today, literally a week ago, that's when it finally got listed on the New York Stock Exchange. So the idea being, yes, a lot of people that have bought homes, especially a small and quote-unquote investment condos in downtown cores, especially in places like Toronto, Vancouver, and to some extent Montreal, were initially bought by amateur, landlord investors, if you will, that were hoping to sell it at a significant to be able to rent it out, short term over things like Airbnb and other platforms, and then in the meantime, that would more than pay the mortgage because regular rentals weren't really profitable. Rentals, as a matter of fact, in many places for condos have dropped anywhere from 10 to about 15% monthly rentals if you're looking at long-term rentals, because again, there's less and less demand for that. So Airbnb still kind of holds this promised land, this potential for helping people kind of bridge the gap that was left in the condo market. Will that happen or not? Well, again, we'll look on the next slide and if that makes any sense. So the data that I just showed you, that's from the CREA. Here's the data that, and that was really, the previous data was released on the 15th, so 2 days ago. And this data was released this morning at 8 a.m. by Teranet-National Bank. And keep in mind, they're only considering Canada's 11 largest markets, whereas the CREA includes significantly more markets than that. So their numbers pretty much never match exactly the same, but this sort of gives you a bigger picture, if you more of an overview of the large cities and what's happening in the large cities, whereas the CREA numbers give you a more holistic approach to the entire country, including smaller towns. So again, this is your second link in the description down below. So here you go. These stats were literally released just this morning. Let me just copy the link in chat as well. Here you go. So what we care about are these numbers over here. So the month-over-month change is 0.93%, and the year-over-year change 8.96. Again, it's still up almost 9%, which, keep in mind, the long-term average rate of return of real estate is around 3.4 to about 3.7%, depending on which stats you're looking at. So 3.5% to roughly average it out would be a fair expectation for real estate, right? So this is still, even if you're only including the 11th largest kind of agglomerations around the country, it's still about 3 times or 2.5 times what you would normally expect in a quote unquote standard year. If you're including more data, like with the CREA, then you get even more extreme valuations. And again, their procedure is a bit different there, which you have that 13.8% year-over-year price increase. Now, what you want to look at is, again, this percentage change, and then you can go all the way back to 2000, since they've been keeping track of this. And we can see here the only time really real estate in Canada in recent history really has lost value massively, other than just localized instances of that, was during the financial crisis in 2000, late 2008 and early 2009 and throughout 2009. Then obviously this year, because 2020 was quite the year, I should say, we had this sort of slowdown. You notice that the price, we've had quite a bit of a price decrease, or at least if not an outright price decrease, but a reduction to the price increase, if that makes sense. So instead of having prices going up like crazy the way they were in 2017, there was this sort of lull in 2018 and part of 2019 where prices were still going up nationally, but at a much slower pace. And then we had a bit of a boost early in 2020, and then obviously COVID happened. We didn't really see any significant declines in housing prices. As a matter of fact, they've been going up. And again, if you're looking at single-family detached homes, they've been going up at a ridiculous pace. It definitely helped that, interest rates are pretty much at the lowest they've ever been. I've recently gotten an email from one of my banks, from one of the banks that I have an account with, pre-approving me for a 5-year fixed rate mortgage of 1.49%, which is ridiculous. Again, I'm not in the market right now for a new home, but think about it, right? That's lower than the long-term inflation rate, like 1.5 or 1.49% on a 5-year fixed rate. That's ridiculous. As a matter of fact, I think other banks like Tangerine and HSBC, if memory serves, they even have 10-year mortgages around 2%, 2.1, 2.2%, where you can literally lock in for that long. And obviously, if you're going with short term, I've seen 1-year to 3-year variable rate mortgages around 0.99%, so less than 1%, which is again ridiculous. So obviously, when you're providing that much money to a lot of people at that low of a rate, it's not surprising that a lot of people will jump into the real estate market, driving prices higher. Now, the question is, how sustainable is that? Is it at all sustainable? Well, that's the $1 million question, right? So key takeaway there, 0.93% month-over-month increase, and then 8.96% year-over-year if you're looking at the last 12 months. And again, and this is including with despite COVID, despite all of the mess. All right, so how can we make sense of this, and why should we care about Airbnb, and how can we use this potentially to strategically either invest, and is it really worthwhile investing in Airbnb, or should you be potentially looking at buying some form of investment property as the economy recovers? Now, as with everything, right? Don't just take a random person on the internet, i.e. me or anyone else really. Don't take what they're saying as something you personally should do. It might be right for you, it might not be right for you. What's important is to look at your personal situation. That's why I'm providing you a ton of links. So this is link number 3, I believe. And look at the metrics. What are some of the risks? What are some of the potential rewards? And make an informed decision. Ideally, consult a licensed professional to figure out whether it makes sense in your specific situation. For some people, this might be a great idea. For other people, this might be terrible. Now, let's look at the data real quick. Now, really funny thing is, again, this is just a print screen that I've taken maybe about 10-15 minutes ago from Yahoo Finance. So I'm just gonna click here. So now this is live, right? So this is live data right now from Yahoo Finance. So obviously, because Airbnb has only been trading for the last week, there isn't a ton of statistical data available for you, in terms of the price to earnings ratio, because the price is fluctuating still substantially, is not really calculated. I mean, you can just work it out if you want, but again, technically speaking, Airbnb right now is losing money, so it will be a negative price to earnings ratio. Earnings per share, again, they're losing money, so sorry, so I meant the earnings per share. They're technically losing money right now. So again, I haven't looked at the latest stats for that. But again, it's a brand newly listed stock. So a lot of the early quote-unquote investors really are speculators. There's nothing wrong with speculating if you understand the added risks and obviously the added potential rewards and benefits. No one in their right mind would try to gamble on something if they don't stand to potentially make money or make more money than other slightly more conservative or safer quote-unquote investment slash ways to manage your money. So very quickly here, Airbnb. So as I said, it's just only been around for a week. So this is all the charting that we're getting here. And you can see that, the price over this time period has fluctuated, but not that much, because obviously there's only so much you can go. So it basically has gone from about 100, and I believe the lowest has been, it's about $120, $121 or thereabouts, to a high of around 166 or thereabouts, right? So quite a bit of volatility, but again, it's a brand new stock. So it's, if you're looking at people doing any form of technical analysis, there isn't much to write home about. There isn't much action that you can, much forecasting that you can do unless you're doing day trading with only, a week's worth of data. So a lot of it would be speculative in nature. And sure, if you speculate and guess correctly, well, great for you. You might have a winner on your hands. But again, realize that it's akin to gambling. Now, if you're trying to read any form of analyst reports and any you're looking at any form of stats, as I said, when something is this new and this fresh, a lot of the data is not that, there's quite a lot of data that is sort of missing, or you would have to run the numbers yourself with data from, you would have to consult the SEC documentation for that, find the latest annual and quarterly reports, if you're able to get a hold of them in some cases, and so on and so forth. So you can see that, they're losing money right now. Overall on a per share basis, but again, that's just that's partial data. We don't really see everything else. So should you invest in it? Again, you can't really call it investing when the data is limited, unless you actually bother doing the legwork yourself and looking at the numbers, running the numbers, et cetera, et cetera, et cetera. Now, my last link, the fourth link that I'll be talking about, is a relatively superficial but a pretty decent analysis that was published in Forbes about a month ago, talking about some of the pros and cons of investing in Airbnb, and what are some of the things to look out for. But again, the way I tend to use the word investing versus speculation, right? Investing is something that has a more shall we say, predictable rate of return. So a balanced portfolio, balanced diversified portfolio, long-term rate of return of roughly 7% or thereabouts. That I consider, that I think that's fair to say that's investing. If you're looking at some of the more established companies that have been along for quite a while, you could say that that's slightly higher risk investing, blue chip stocks and whatnot. If you're buying into an IPO, granted, right now the market cap of Airbnb is $74.56 billion. So by all means, it's a blue chip, but it's a very young blue chip. So you would be speculating. Again, nothing wrong with speculating. I just want you to understand that you're trying to guess. So you're paying basically 232 times more than what the company's underlying assets actually are. Does that make any sense? Versus, if you're looking at, let's say, a much more established company like Microsoft, if you were to look at its price to book ratio, it's something in the sphere of 13 to 10 to 13 times, depending on when you're looking at. If you're looking at the most current one, which is about 13. But again, Airbnb has a lot of potential for growth, whereas Microsoft at this point, you could argue that is a more established company, that it doesn't really behave as a growth company as much anymore, right? So should you buy some? Again, for most people, the answer is probably not to buy individual Airbnb stock. If you don't mind speculating, you don't mind the higher risk, might be worth a shot, but again, you're speculating. It's not really investing, and you should not call it investing. But let's look at some of the numbers, right? Let's look at some of the analyses. Now, keep in mind, forecasters, whether they're a mere contributor, whether they're Wall Street heavy hitters, how many analysts last year, right? Every single year in early to mid-December, virtually every single large firm out there will come out with their 2020 or 2021, basically the next year forecast. How many analyst forecasts predicted a pandemic, a significant market crash in March with a significant rally in the latter half of the year? No one did that. How many people predicted the last, financial crisis? Pretty much, or how many analysts predicted? Pretty much none of them. There were a handful here and there saying, there are some issues with housing. There are some issues in the U.S. There are some issues with collateralized mortgage obligations, et cetera, et cetera, et cetera. But the vast majority of them missed it completely. One of the main reasons why they missed it completely is about 73.1% of the time, the stock market ends the year higher than it started it with, right? So if you're the one analyst that wants to keep their job and you're trying to go against the grain, you know that statistically speaking, you have about a 73.1% chance of being wrong if you say that next year the market is going to go down. So as a result, a lot of analysts just go with what everyone else says, that, the market overall is going to be a good market next year. And you can look at a ton of data, looking at what are interest rates like, and you can do a ton of technical analysis, yada, 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 right? And I'm not saying that's worthless or pointless. The point is, again, those are best guesses. And these individuals, a lot of them are highly paid and highly capable. But then a curveball can come out of nowhere and completely eradicate and undermine your predictions in your forecast. And yes, at the end of the day, 2020 ended up actually making quite a few people quite a lot of money, even if you were just invested in indexes. So, for instance, if you were, let's say, if you invested in the Nasdaq, right? So I'm just going to use the XQQ proxy over here, which is a Canadian version of it. So if you're looking at over the last year, literally over the last 365 days, the Nasdaq is up 45.65%, right? So you could say, well, obviously the analysts were right. It's up. But what happened had you, let's say, let's go look at March 23rd over here, right? So when we had the bottom. So March 23rd, if you're going 1 year prior to that, right? You would have actually lost, here we go, you would have lost 6.71%, which doesn't sound like much, just because the previous year in terms of if you're looking at the high, the previous year for the Nasdaq was actually a pretty darn good one as well, which we've seen about 37% price increases. So 2020, despite COVID-19, Nasdaq actually made about 8% more than it did the previous year, which was already a record, or a really, really good year in the grand scheme of things. So again, that's when you're looking at the entire market, right? Or the entire NASDAQ. What if you were to now look at individual companies, right? Some companies have been on a tear recently. If you're looking at Amazon, Google, Tesla, even. So individual companies might do really, really well, but many others have done quite poorly. So because of this is what I'm saying. Staying invested in the market can be incredibly profitable, even in incredibly uncertain times such as 2020. Picking one individual stock, hoping that you're buying it at the right time and that you're able to hold on to it until is the right time to sell, that's a lot harder to do for most. Some don't have the patience. Some don't have the knowledge, and in some cases, some people are just stuck in a position where what would you have done had you lost your job in March, right? And if you were in Canada and you were lucky enough to be in Canada in many regards, and you got CERB or you got some other government subsidy or some other form of government aid to account for your lost employment, most people did okay, right? But at the same time, right, it depends what your prior employer was paying you. If you're earning the average amount, $2,000 a month, especially if both you and your spouse were let go, $4,000 a month was probably more than enough to make ends meet, especially that, you had mortgage deferrals, etc., right? But what if you were one of those individuals that is earning $300,000, $400,000, $500,000 a year and you lost your source of income? That $2,000 a month is better than nothing, but if you stretched out your resources where you basically you have a $5 million mortgage on your home or on your mansion, I should say, those $2,000 a month, if you would have had to pay your mortgage, would not have been nearly enough, right? So again, it pays to take risks in life. It pays to speculate, but it's also very risky, and for some people, it might not be the right thing. So again, I'm not trying to say don't go for Airbnb. I'm trying to make you realize that it's a guess. It's anyone's guess. So if you want to gamble with Airbnb, what should you look at? Well, again, this is a pretty decent superficial summary, I should say. It's not an in-depth review, and as I said, the in-depth reviews many times they go into way more detail than they should, and for most people, honestly, it's just guesswork, right? When you have limited data to work with, right? So here they're talking about how much money they're making, and they're kind of highlighting that, they're going from 2008 when Airbnb pretty much made zero money to, they're listing, I don't remember exactly how many millions in 2019, like 674 million and so on and so forth, right? In 2019. Now, obviously, you have to realize that. These are the losses they've incurred, and they were looking at overall kind of cash flow. I believe a bit higher up over here somewhere. 3.1 billion. So they were. So bookings. So they had over 327 million bookings in 2019. Obviously, from zero bookings 2008 because the company was just founded then. Now creating a classic hockey stick curve. So obviously we've seen this massive increase, and then with Airbnb had some massive issues with more and more restrictions being put in place in countries all around the world against travel, against many condo associations in Canada especially, have made it illegal for people to have any form of short-term rentals. So should you be investing in investment property instead of just buying some Airbnb stock? With the hope that you'll be able to use Airbnb or another similar platform, a few months from now, or maybe by late 2021 or early 2022. By early 2022, once the economy reopens in earnest and once travel is more easily attainable, et cetera, et cetera, et cetera. Well, again, no one knows what individual condo associations and condo boards are going to be doing. I'm fairly certain quite a lot of them will probably want to keep at least some of those restrictions in place in terms of barring rentals for non-residents or short-term rentals for non-residents. So in that regard, it might not necessarily be it might not necessarily be as safe as one might think. But condo prices, as I've showed you earlier, have been declining. So it might be, a condo that you thought was worth $700,000 a year and a half ago, you might be able to get it for under $600,000 right now in certain sub neighborhoods or sub areas of Toronto, for instance. Is it a right time to buy that condo? Time will tell. My point being is, if you have the money available to you and you need a place to stay and you don't mind living in a condo, you have longer term potential price appreciation and you can afford the mortgage, might be worthwhile going for it. If you're stretching yourself, to the teeth, and the only way you can afford that condo is hoping to rent out half of it via Airbnb by next week, you probably should stay away from that particular condo. Because it's definitely out of your price range and it's definitely not something you can reasonably afford, right? So right now, they've accumulated a deficit of $2.1 billion. Again, that's the latest quarterly updated in September. We will find out the latest December numbers by the end of December, so probably they'll be published early January. So I don't know those numbers just yet, and that's why I'm saying I don't like to make investment decisions based on limited partial data, right? This is speculation at best, right? So then, here they're talking about the roughly 20% drop in Airbnb bookings, but obviously a lot of that will come back, but it might not come back at the same rate in all jurisdictions. Again, we will have to wait and see what happens with travel. When and if some form of COVID vaccine app/passport will be implemented in different countries. So that might limit people that, for instance, don't want to take the vaccine for a number of reasons. That might limit them from traveling. That might reduce overall travel to some extent. It is still up in the air whether corporate travel will resume to pre-pandemic levels and when that would happen. Because, a lot of times when and I've said this since March, it only takes about 3 to 4 weeks to develop a habit, right? Once it became kind of standard that corporations would have business meetings with their clients via Zoom and other online platforms, then it's still become a standard to do that. In the past, it used to be seen as a bit of a faux pas if you're trying to secure a new client account to not send one or X number of your employees to sort of schmooze and interact and give a live in-person presentation to some of your clients in some cases, right? So you would fly over a team of 5, 6, 10 people just for a 30-minute meeting. You might fly them intercontinentally, right? That for some industries that will come back. It's a bit questionable when, and obviously a lot of those individuals might have been using standard hotels, but people from smaller companies or more price conscientious companies would have probably used Airbnb. And I personally have used Airbnb locations when I was traveling to give webinars at different Canadian universities because it made a lot more sense than paying twice that on a hotel room, right? That was oftentimes further away from the university that I was interested in giving the presentation at. So again, all of these are speculative, right? And no one out there that tells you Airbnb is good or Airbnb is bad or high risk, low risk, no one has any clue when those restrictions will be re-implemented or loosened up again, and how, let's say, regulations in New York State will vary from regulations in Vegas, from regulations in Peru, from regulations in Japan, from regulations in Montreal or Vancouver. It'll be very, very different. And again, the whole, I guess as an investor looking at something like Airbnb, the massive kind of attraction of Airbnb, at least to me, would be the fact that, well, you know what? It's Airbnb, by many accounts, is the world's largest hotel chain, if you want to think about it that way. In terms of, if you're looking at the number of rooms that were available pre-pandemic via Airbnb compared to any of the large name brand hotel chains out there, Airbnb had significantly more rooms available in pretty much any area, any locale around the world, whether you're looking at tiny little remote villages or massive metropolitan downtown areas. Whereas there aren't really many, Hiltons in the in the Aral Mountains, for example, in a tiny little village somewhere, right? So again, there are some potentials, but all of this is very, very, very speculative in nature. So again, I don't want to be the one telling you what to do. So do your own research, but I would highly advise that you have a look at this little article over here, and look at kind of their predicted sort of value. As I said, all of this is just pure speculation. That's why I'm not going to be repeating what they're saying. But yeah, overall, so in summary, I should say, Airbnb has been around for a week. If you're doing any form of technical analysis, it's a bit hard to do technical analysis unless you're doing day trading on only 1 week's worth of data. So it would be really kind of a shot in the dark, honestly. And again, day trading for vast majority of people doesn't work unless you really, really know what you're doing. And even then, it's questionable. So that's one. Number two, should you buy an investment condo? Well, again, make sure to understand the and then use it via Airbnb. Make sure to understand the bylaws of your condo association. Make sure that it's actually allowed or might be allowable to do short-term rentals within the next X number of months or a year or so, once COVID is a bit more under control with the vaccines, etc. Otherwise, you're just gambling. Now, that being said, single-family detached homes have been going up in price like substantially in many Canadian areas. So condos, there might be an argument to be made if you thought a condo was worth $700,000 X number of months ago, it might be worth, it definitely might be worth $600 now. But the question is, to what extent was that $700,000 valuation based on that condo potentially earning you $3,000, $4,000, $5,000 a month in Airbnb rentals versus short-term rentals versus merely $2,000 or $2,500 a month if you were to just rent it out long-term, if you're able to get someone like that. Anyway, so those are my thoughts. Again, I tend to not give a definite yes/no because it's honestly, and I'm just being honest, it's a guess. Regardless of whose analysis you're looking at, it's a best it's anyone's best guess. I just hope it sort of made you aware of some of the things to look out for. Personally, I'll be investing in Airbnb via an index fund. That way, I'll take part of the pie, but I don't need the entire pie. I'm okay just having part of it. So anyway, so that's pretty much it for me today. I'm actually surprised my voice managed to last this long. So hopefully you found this useful. If you have any questions, as always, leave them in the comments down below, and I'll be more than happy to answer this. And for this year, I'll have actually on Christmas Eve, which is next week, the 24th, I'll have a short live stream then as well. Whether you can attend the live stream or you want to just listen to it later, that's up to you. But if if you don't attend that one, Merry Christmas, Happy Holidays. And yeah, I'll see you potentially at the next session in the future. All the best.